Hello, this is the TradeSite Forex market preview and international economic data roadmap for the week beginning Sunday, June 5th and ending Friday, June 10th, 2016. Almost halfway done with the year already. Here's a look at the dollar index daily chart. Pretty slow week up until the tankage on Friday after the economic numbers came out, both trade balance and more importantly the non-farm payroll number hurt things badly, and it caused a gap in the market which was not tradable for us. So, what do we get? Well, let's take a look at the pairs individually and see what they did. So obviously the euro bounced when the dollar sank, heading back towards that green static trend line. The pound didn't have as much of a bounce, but it did bounce off of that red static trend line. Aussie dollar also curled up. None of these are showing any chart patterns that are useful in terms of giving us buy or sell signals right now. Pound yen breaking to near the lows. Euro yen actually making new lows. It'll be interesting to see what that does when it hits that pink static trend line. Pound Swiss also down for the session or for the week, and the New Zealand dollar up, as you would expect, against the dollar there. So, it was a slow week until then. Let's take a look at how slow and move on. Look at this chart. That's the 5-minute chart. Sorry, here's the 30-minute chart, so you can see the whole week. It still looks pretty goofy, right? So, in terms of total movement for the week, you'd say, ooh, the ranges were good. High to low. We came into the week open flat, and then high to low for the week is 270 pips. I wouldn't call that amazing, but it sure sounds good on paper. Unfortunately, the gap on Friday on the news, and you can see if you take that whole thing out, then the high to low of the week is only about 120 pips for the entire first 4 days of the week. That's horrible, considering the euro usually trades 120 pips per day on average. By the way, we just posted our May Forex results. They're on the market blog on our site. Another positive month with basically a 50-50 win-loss ratio, but up about 220 pips. You can take a look at that if you get a chance. So anyways, 120 pips for the week until the data that's not tradable is not particularly useful on the euro. Also, let me take a second here and turn off the Forex levels so you can see just the raw trading, which is what matters at this point. Then look at the pound, same story. Obviously, there's a gap up. Difference is we'd already been down a little bit for the week, so this thing traded about 300 pips for the week. Very flat on Monday, up Tuesday, some big moves down. Tuesday, Wednesday a little bit lower. Thursday was as dead flat as you can possibly get. Horrible action, waiting for those data points probably. And then Friday, the gap up here, not nearly as significant as it was against the euro. Let's take a quick look at the Aussie just so we can get one more. Same kind of thing. Pound yen. There's some range. Almost 1,000 pips of range for the week there. All right, so what do we have to look forward to in the week ahead? Charts as usual brought to you by eSignal 12, of course. Let's go through the economic calendar for the next week. So we've got New Zealand on bank holiday, inflation gauge out of Australia, Sunday night. Monday, German factory orders, retail PMI out of Europe, Centex, investor confidence out of Europe. Fed Chairperson Yellen speaking. We've got the labor market conditions number here in the U.S. AIG construction index out of Australia Monday night. So really nothing in the U.S. Monday. Japan 30-year bond auction Monday going into Tuesday. We got a rate announcement out of the Bank of Australia. Leading indicators out of Japan. German industrial production. French trade balance. Foreign currency reserves. Halifax HPI. We've got revised GDP out of Europe. 30-year bond auction out of the UK. Non-farm productivity and unit labor costs here in the U.S. Canada's IBPMI at 10 a.m. TIP economic optimism number here in the U.S. Consumer credit in the afternoon, doesn't matter. Manufacturing sales out of New Zealand. And then Japan does their GDP, current account, bank lending, and price index at 7:50 p.m. Eastern Time Tuesday night. Home loans out of Australia. Trade balance out of China. Japan economy watchers sentiment. CPI out of Switzerland. Manufacturing production and industrial production out of the UK. Housing starts and building permits out of Canada. This is all Wednesday morning early. JOLTS job openings here in the U.S. The crude oil inventories, that's the weekly number. The 10-year bond auction at 1 p.m. Eastern Time here in the U.S. Rate announcement out of the Bank of New Zealand, and then their press conference. Japan's got core machinery orders and M2 money stock. Bank holiday in China on going into Thursday. CPI and PPI in China. Love how they put those out together. I think everybody should. French non-farm payrolls, unemployment rate out of Switzerland, German trade balance, Japan's preliminary machine tool orders, Italian quarterly unemployment rate, the goods trade balance out of the UK, whatever that is. Canada's NHPI and capacity utilization rate. This is Thursday morning on North American side, along with the weekly unemployment claims here in the U.S. Wholesale inventories here in the U.S. Natty gas here in the U.S. It's the weekly number. 30-year bond auction here in the U.S. PPI out of Japan. Bank holiday out of China again, so they're basically off the back half of the week. Tertiary industry activity in Japan. German final CPI and WPI. French industrial production. Money supply out of China and new loans. Italian industrial production. Canada's got their unemployment rate. U.S. has its University of Michigan sentiment number, and then the budget balance number. And that is it. So none of our big three, no Fed announcement here, although you've got them in Australia and New Zealand. A straightforward trading week. There's certainly plenty of data, but it's just none of the big ones. Hopefully we get a little more range than we saw last week, and then avoid the gaps on the news. Those haven't happened in a while, but those are certainly awkward from a trading perspective. That's why we don't like to get involved in those, because you really can't. Anybody tells you different doesn't know what they're doing. If you have not taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.